Hi students, 12th Standard Accountancy, Chapter-5, Admission of a Partner. Exercise sum number 26. Let's read the question. The following is the balance sheet of James and Justina as on 1/1/2017. They share the profit and losses equally. Liability items are given here, assets and items also given here. Okay. So from the given information, we need to pass the journal entry for our understanding. Okay. So on the above data, Balan is admitted as a partner with 1/5 share in future profit following or as the following is admission. Listen here, Balan is a new partner. His share of profit is 1/5. How can he get his share of profit? From the old partners sacrificing their share of profit in the sacrificing ratio only. New partner Balan will get 1/5 share of profit. Okay. Listen, Balan brings 25,000 capital, 25,000 rupees capital. So cash comes into the business. 25,000 cash comes into the business in the name of capital. What is the journal entry? Cash or bank account at 25,000 rupees to Balan's capital 25,000 rupees. His share of goodwill 10,000 rupees and he brings cash for it. Okay. So Balan is a new partner. His share of goodwill is 10,000 rupees. And he also brought that 25,000 rupees towards the goodwill. Okay, so cash comes into the business in the name of goodwill. Okay, so cash and bank account at 10,000 rupees. That goodwill immediately transfer to the old partners capital account with the sacrificing ratio. Why? Because old partners sacrifices their share of profit in favor of the new partner Balan only. New partner Balan get 1/5 share of future profit. Okay, so that share of goodwill always belongs to old partner. The new partner share of goodwill belongs to whom? Old partner's capital account. Okay, it will be transferred to old partner's capital account in sacrificing ratio. Sacrificing ratio is not given in the question, so we are going to take old profit sharing ratio as a sacrificing ratio. Old profit sharing ratio is the old partners share their old profits in equally. Okay, so that 10,000 rupees a share of goodwill goes to the old partners capital account equally. Who are the old partners? James and Justina. Okay, so what is the journal entry? Bank or cash account at 10,000 rupees to James capital account 5,000 rupees, Justina's capital account 5,000 rupees. We passed it. Then the assets of the valued as under building 80,000 rupees. We have building value 70,000 rupees in the from the question. Okay, so here building 80,000 rupees what appreciated. So which means building account increases, asset account also increases. If the asset account increases, revaluation account is to be credited. So revaluation account credited. Which account is to be debited? Building account is to be debited. Debtors 18,000 rupees. Debtors given in the question 20,000 rupees. So debtors value 18,000 rupees decreases. 2,000 rupees decreases. Debtors account decreases. Asset account also decreases. Okay, whenever asset account decreases, it will be a revaluation account is to be debited. Revaluation account at 2,000 rupees to debtors account 2,000 rupees. Then stock 33,000 rupees. In the question, stock value 30,000 rupees given in the question. Okay, it will be increased from 30,000 to 33,000 rupees. So stock account increases. If the stock account increases, asset value also increases. Whenever asset value increases, revaluation account is to be credited. So which account is to be debited? Stock account is to be debited. Stock account at 3,000 rupees to revaluation account 3,000 rupees. Then we pass a journal entry from the given adjustment. Let's see the question in the box. We have reserve fund in the question 15,000 rupees. Reserve fund will be distributed to the old partners with their old profit sharing ratio. So old profit sharing ratio, they share their profits and losses equally. Okay, so what is the journal entry? Reserve fund account at 15,000 rupees to James capital account 7,500 and Justina's capital account 7,500. So now we are going to prepare the what they asked, prepare revaluation account and balance sheet after admission. Okay, so we prepare the ledger account, which means revaluation account. Listen the journal entry. Where the revaluation account appears in the journal entry, in this way we are going to present or post into the ledger account. Okay, so where is the revaluation account? The third transaction we have the revaluation account. It is to be credited. Revaluation account is to be credited. So you go to credit side of the revaluation account and write the opposite account, that is debtors account. So listen, buildings account. Okay, so by buildings account data 10,000 rupees entered. The fourth transaction we have the revaluation account is on debit side. So you go to debtor side of the revaluation account and write the opposite account, that is debtors account. 2,000 rupees entered on debit side. And where is the revaluation account? Fifth transaction we have the revaluation account. It is on credit side. So you go to credit side of the revaluation account and write the opposite account, that is stock account 3,000 rupees. By stock account 3,000 rupees entered. So revaluation related transaction we entered from journal to ledger. Now we are going to find out the difference between debit and credit side. To find the difference between debit and credit side, we need the total. Which side we have the higher value, that side we calculate the total. In this way, credit side we have the higher value, 10,000 plus 3,000, 13,000 rupees. The same total amount we are going to enter it on debit side. After you enter the total, below the total you are going to draw the two lines, which means the two lines denoted total. Okay, 13,000 from the 13,000 total you are going to subtract 2,000, you will get 11,000 rupees balance. Okay, so if you get the total on credit side, you will get the balancing figure 11,000 on debit side. That 11,000 rupees is called as profit on revaluation account. Okay, that profit on revaluation account transfer to the old partners capital account with their old profit sharing ratio. Who are the old partners? James and Justina. Their profits, they share their profit and losses equally. Okay, so that 11,000 rupees will be distributed to 5,000, 4,500 and 5,500 to old partners equally. Okay, then immediately we are going to pass the journal entry for the balancing figure of the revaluation account. Where is the balancing figure appears in the revaluation account? It is on debit side, debtor side. Okay, revaluation at debtor side we have the balancing figure. So revaluation account debtor 11,000 rupees. Then that revaluation balancing figure immediately we transfer to the old partners capital account. So to James capital account 5,500 rupees and Justina's capital account 5,500 rupees we passed into the journal entry. So revaluation account prepared. Now we are going to prepare the capital account. The opening balance of the capital account always shows on credit side. The opening balance of the capital account they given in the question. Okay, so capital account for James and Justina are 40,000, 50,000 respectively. Opening balance of the capital account we are going to write by balance brought out 40,000 for James and 50,000 for Justina's column we entered. Okay, listen, in capital account what are the transactions related to capital account to be appears in the journal entry? It is to be entered on capital account. Okay, so in this way, let's take the first transactions. We have the balance capital account on credit side. Okay, so you go to credit side of the capital account and write the opposite account, that means cash or bank account. By bank account we are going to enter 25,000 rupees on in balance column. Why? Balance is a new partner who brings 25,000 rupees cash in the name of capital. So we entered by bank account 25,000 entered on balance column. So where is capital account appears in the journal entry? The second transaction we see the capital account. Where is it? It is on credit side. Capital account is on credit side. So you go to credit side of the capital account and write the opposite account, that is bank account. Bank account. So by bank account 5,000 for James column and 5,000 for Justina's column we entered, which means the new partner Bolan brought 10,000 rupees share of goodwill. It will be immediately transferred to the old partner's capital account with their old share equally. Okay, so we enter that old partner's capital account into the capital account. Then let's check the journal entry. Where is capital account appears? The sixth transactions capital account appears on credit side. Okay, so old partner's capital account is on credit side. So you go to credit side of the capital account and write the opposite transaction, that is a revaluation account. By revaluation account, 5,500 for James column and 5,500 for Justina's column we entered. Okay. Then where is the capital account appears in the journal entry? 7th transactions we see the capital account, old partner's capital account. Okay. It is on credit side. So you go to credit side of the capital account and write the opposite account, that is reserve fund. By reserve fund account, 7,500 for James column and 7,500 for Justina's column we entered. Okay. So capital related transactions accounts we entered into the capital account. Now we are going to find out the balancing figure, that means the closing balance of the capital account. To find out the closing balance of the capital account, we need to calculate the total. Which side we have the higher value, that side we have to calculate the total. In this way we have credit side we have the higher value. So 40,000 plus 5,000 plus 5,500 plus 7,500, we get the total 58,000 on James column, 5,000 plus 50,000 plus 5,000 plus 5,500 plus 7,500, 68,000 on Justina's total, 25,000. Balance total is 25,000. Okay. The same total amount we are going to enter on debit side in the same horizontal line, 58,000 and 68,000 and 25,000 respectively. After enter the total, below the total you are going to draw the double line. Okay, that is called denoted as total. After enter the total, lesser side we are going to find out the balancing figure. Lesser side means a debit side. Debit side we don't have any value. So what we have to do? We are going to enter the same total amount on debit side column. Okay. So 58,000, 68,000 and 25,000 we entered from the total. Again this total amount we are going to write to balance carry down. To balance carry down means the closing balance of the capital account for the current accounting period. Okay. After enter the current accounting period, closing balance of the capital account, immediately we are going to brought it down to the opposite side and enter below the total the same closing balance amount, 58,000 and 68,000 and 25,000. Against this amount we are going to write by balance brought down. By balance brought down means this is the opening balance of the capital account for next accounting period. Okay. So we prepared capital account. Now we are going to prepare the new balance sheet. Okay. So dated on the new balance sheet as on 1st January 2017. There are two sides, liability side and asset side. You always started with the liability side is easy for you. The first account for the liability, first item of the liability side is capital account. Who are contributed the capital account? James, Justina and Bolland. 58,000, 68,000, 25,000 respectively. The total amount of the capital is 1,51,000. And creditors is given in the question. Creditors 35,000. We are going to enter it on liability side. 35,000 we entered. Then come to asset side. As per the question, we are going to enter on asset side. Okay. So building 70,000. With building, we are going to add 10,000 rupees. With building 70,000, you will get 80,000 rupees. Stock value 30,000 rupees from the question we entered. Stock value 3,000 rupees appreciated. So 3,000 plus 30,000, you will get 33,000. Debtors value 20,000 rupees entered from the question. We have to subtract debtors 2,000 rupees. After subtracted, you will get 18,000 rupees. Bank value, listen, bank value 15,000 rupees given in the question. With that bank value, you are going to add new partner ball and bring 25,000 rupees cash in the name of capital, which is also added with the bank amount, and 10,000 rupees goodwill also brought from ball and new partner ball. These capital account, new partner's capital account and new partner's share of goodwill will be added with the bank amount 15,000 rupees. You will get 50,000 rupees. Okay, after added 15,000 plus 25,000 plus 10,000, you will get 50,000 rupees. You no need to create separate account for cash at bank column. Okay, so then prepaid insurance 5,000 rupees we copied from the question. Okay, so all are the related transaction related to liability side and asset side we entered into the balance sheet. Now we are going to calculate the total. First we are going to calculate liability side total. Okay, 1,51,000 plus 35,000, you will get 1,86,000. Now we are going to sum up the asset side value. 80,000 plus 33,000 plus 18,000 plus 50,000 plus 5,000, you will get 1,68,000. So you got the same value on asset and liability side, that is 1,86,000. Okay. Do you have any doubt? Please comment it in the comment box. Thank you. Take care.